All right, folks, how are we doing today? All right, so today I wanted to walk through a 200K powerhouse portfolio that can generate over 400K in income. We'll be using Div Tracker to check this out. As per usual, we're doing templated portfolios so you can see how to map out your strategy. Let's jump right into it. All right, guys, first and foremost, thank you to everyone who has participated and joined into the Patreon. We're up to 82 members, and I'd love to continue to grow this community. So if you'd like to, please jump into the Patreon community. If you want to participate, it's $5 a month for access to all the calculators and access to the community. And I'm probably going to add in a Discord. And then also $15 a month should you want to do financial coaching once a month. Please jump in. We'd love to have you, and I would love the engagement with more people and more exciting investors. So jump on in. We can't thank you enough. All right. So jumping into this portfolio setup, this is a portfolio worth 200K, and this 200K can deliver for us 41K in annual dividend income, guys. Of course, this is before tax, so ensure that you're accounting for tax in all of this, but 41K in pre-tax income, guys. And of course, these ETFs I've chosen have return of capital structure, so they're very tax efficient. But anyways, 41K in annual dividend income, which is phenomenal. And in this case, I've selected only a core 3 higher yielding ETFs that, generally speaking, are NAV stable and NAV growing. That's a huge priority for me in this community and in my investing philosophy. I focus on NAV stability and NAV growers. All right, so this annual dividend income again is 41K, and then monthly you're going to be able to deliver about 3.5K in monthly income, $800 weekly, $113 daily. Okay, that's a phenomenal amount of income on in my opinion, a fairly reasonable or low investment amount to generate this type of income. This is certainly a lot of money in general, but to deliver this type of dividend income, usually you need a lot more funds. But the power of these covered call solutions allows us to yield farm and get these great yields with fairly stable, really stable. I shouldn't say fairly, really stable, growing NAV ETFs. All right, guys. So what are those ETFs I've chosen? All right. So for Bitcoin exposure, and for this, we will rely on the high volatility of Bitcoin to unlock a great distribution on the Bitcoin side. So I've chosen Baggy, guys. Baggy, which is Amplify's covered call Bitcoin max income ETF. And this yield is expected to be 30% per year, guys. Okay, 30% per year. Now, is it always going to be like that? Maybe it comes down, maybe it comes up, but due to the volatility and their strategy, they're quoting 30 to 60% distributions. I think it's more going to be on the 30% side, but 30% distribution. And that is what is allowing us to build this great portfolio and this high income position right now, right? In this case, we have allocated 80K to Baggy, and that will deliver us 25K in annual dividend income. All right, so that is a difference than what I used to use, which is used to use like Neos and BTCI from Neos. But in this case, I wanted to find one that has a little more yield to squeeze as much yield as possible from this portfolio to get us above 40K. And to do so, I chose Baggy as our Bitcoin exposure. Now, this is high risk. This is not financial advice. So, take this with, to your discretion and do what you see is right for you. But Baggy is something that I think is actually one I do invest in myself, and seeing good results in the short term. Now, they are newer funds, but in the short term, seeing good results. Now, next, QQQI from Neos, the NASDAQ exposure covered call, a tried and true classic for us. We have 76K cost basis here. That's going to deliver us 14% dividend yield and 11K annual dividend on 76K cost basis. Phenomenal stuff. QQQI, one of the best QQQ underlying covered call income ETFs in the market today. For our S&P exposure, right? So we like to have QQQ exposure. We like to have S&P or SPY exposure, and we like to have Bitcoin exposure. That's kind of the trio, in my opinion. You could do other things, but for me, this is my trio. So SPY exposure We instead of using SPY, we're using T-SPY from Tap Alpha. All right. Why? Because they have a zero DTE strategy, so they're able to build a better distribution rate from the constant yields farming on the dailies, on the daily option expiries. So with that, they're constantly rolling in new options, and they're able to deliver almost 14% yield, somewhat close to QQQI. And they also have a new product coming out called TDAC. It's already out. And so we'll see what the dividend will look like on that shortly. But for now, QQQI on the QQQs and T-SPY for the SPYs. And that's going to give us 5K in annual dividend income for a cost basis with a cost basis of 40K. So this entirely will deliver us 41K in income, and it's all good. And of course, you can also drip this. You don't have to withdraw it. You can be dripping it, reinvesting it to snowball, and you can see here that if you snowball this, right, year one, the 40K, by year 20, we're looking at like $2 million in dividend income. All right, guys, like these are huge dividend incomes, guys, on an initial 40K in income. So what's happening is you're adding the income back in, reinvesting it, and you'll see that snowball effect, right? Your portfolio value in year one goes from 200K to 10 million by the end of this whole thing, right? Or you can decide at any point, you know what, I'm good with this number after year 8. You know what, let me start using this to live on. Let me start using this money to live on, or splitting it, however you see fit, you can do. And of course, we have annual contribution of 10K per year. I think hopefully we can all get to 10K per year. If not, let's build some strategies to contribute 10K per year to savings. Mission critical here is continuing to save and invest, guys. You want to, focus on your future and not just focus on what you have today, but continue to build and save and invest and invest and invest. All right. And so with this strategy, another cool thing about this strategy from a calendar standpoint and a payout standpoint is you're going to get multiple payouts throughout the month. All right. So with T-SPY, you're going to get a payout early in the month. QQQI, you're going to get a payout around the 24th or 26th. And then Baggy, you're going to get it around the 29th. So you get to split out your pay dates in case you need to, pay for different things at different intervals throughout the month. This is a good way to kind of split it out and not just use one specific company. Splitting out your companies, doing Amplify here, Neos, and Tap Alpha allows us to, generally speaking, have different payout dates. And that's a good thing for diversification of payout dates. So I think that's good. And guys, that is it for today's video. This is a strategy that I think is higher risk as per usual. The yield here on cost, 21% yield, or 20% just total yield here. So it's an aggressive portfolio. But if you're bullish on Bitcoin, as I say, if you're bullish on the US total market, is obviously, S&P is about 87% of the total market cap of the US market. Of course, QQQ is a subset of that, focused more on tech. And what I always like to say is you can't have enough of a good thing. And that's why we have the Qs and we have the S&Ps. But guys, what do you think about this simplified 41K income portfolio? Are these ETFs you're investing in? Would you augment it in different ways? Am I seeing something different that you're seeing? Let me know in the comments below. And please sub to the channel, and all the best, guys. Cheers.